You're watching Silver News Daily. Subscribe for more.
Did you know silver could be the key to weathering the biggest financial storm of our lifetime? With rising U.S. Treasury yields, a soaring gold-silver ratio, and Asia draining Western silver supplies at record speed, we're on the verge of a major market shakeup. The question is, will you seize this opportunity or let it pass you by? Stick with me, because what I'm about to reveal could completely change how you protect your wealth.
If we get to the point where, and this would be particularly, I think, on the economic side, sanctions against Russia, attacks against Russia, if you like, get to the point where Russia decides that it's got to trigger the nuclear, the financial equivalent of a nuclear bomb. And we're nowhere near there yet. Because if Russia said, right, we're going to put the ruble on a gold standard to protect the ruble, which actually is very sensible. I mean, I don't know how many people have noticed, but recently it has been very weak. It went down from around about 90 odd to the dollar to 115 all of a sudden. And they've got interest rates running at 21%. And, there's talk it might even go higher. But actually, the Russian economy is in extremely good health. I mean, it's the extraordinary thing. Putin could put the ruble on a gold standard very, very easily and keep it there. And going back to my point about the function of an interest rate is to manage the gold reserves. He starts from a point of 21% overnight money in the Bank of Russia. Gold on COMEX or wherever, if you can find it, least yields what, 1.5%, something like that. So if you can get it at 1.5%, ship it over to Moscow, knock on the door of the central bank and say, here's some gold, give me rubles, please, because the rubles will be a gold substitute, make no mistake. Then you've got an uplift of, sort of 19, 20% on your money, just on a round trip. I mean, what's not like, this is the point. This is why interest rates are so important. What would then happen once it becomes established? I mean, okay, you wouldn't find any Western bank doing this. Apart from anything else, governments would lean on them not to. But you would certainly find the Russian banks. You would certainly find some of the Chinese banks doing it. You would find other banks around Asia doing this too, because it's money for all.
Silver prices are heating up, and the numbers don't lie. Over the past year alone, silver saw an impressive 36% surge, outperforming many other commodities. Now, experts are setting their sights even higher, projecting prices could reach $40 to $50 per ounce in 2025. But why is this happening, and why now? First, let's look at the bigger picture. Silver has always been a unique asset. It's both a safe haven investment like gold and a critical industrial metal used in everything from solar panels to electronics. This dual nature creates a powerful dynamic. When the economy stumbles, silver shines as a hedge. When industries boom, demand skyrockets for its irreplaceable industrial uses. Right now, we're seeing the perfect storm. On one hand, investors are flocking to silver as a hedge against rising economic uncertainty, spurred by climbing interest rates and fears of a credit bubble bursting. On the other, silver is in high demand across industries like renewable energy, where photovoltaic solar panels alone now consume over 10% of global silver production. What's even more striking is the growing supply imbalance. The silver market has been in a deficit for the last 4 years, meaning demand has outpaced supply, a trend that doesn't show any signs of slowing. Miners are struggling to keep up with industrial needs while the physical silver market is being drained by massive purchases from Asia. So, with prices currently hovering around $30, what happens when this supply-demand squeeze intensifies? Could we be at the edge of a historic breakout? Keep watching, because the factors driving silver's growth run deeper than just these headlines. The big question isn't just how high silver can go. It's whether the West is prepared for what's coming.
It does, really. No, I don't think it does. I mean, Syria was sort of rather sudden, wasn't it? And this leader of HTS has tidied up his beard from his jihad days and now looks presentable. You sort of get the feeling that somebody has sort of primed him for this role. Syria, I'm afraid the story there hasn't ended. There's so many factions. You got the Israelis trying to capture the whole of the south, Golan heights and all the rest of it on, going north. You've got the Turks, you've got the Kurds, who the Turks hate. You've got the Americans stealing all the oil, in the northeast. And you've got tribal conflicts. You've got the Russians with the port. I mean, there's so many factions now. I mean, I just think that the country is likely to disintegrate in a similar way to Libya after Gaddafi was overthrown. So that's not good. I think that what's going on really with Ukraine is it appears to me, and I can't find any other explanation, but it appears to me that the Biden administration is just trying to make things worse for the incoming president. They're basically just ramping the thing up. I mean, it's a lost cause. Ukrainians are losing. And you can detect this in Zelensky's manner too. I mean, he's talking now about negotiations and so on, whereas before he wasn't. There was no way. I mean, he tried to negotiate earlier, and we stopped it, which I think was unconscionable. I think that was terrible. Think of all the Ukrainian lives that have been lost since. And for what? I mean, we believe the Russians want to take over the world. I mean, it's complete nonsense. It flies in the face of the facts, and we are being given propaganda, if you like. Anyway, enough of this ranting and raving on my part. I think the point, as to your question, is that I don't see this really affecting gold and silver, except...
Now, let's talk about one of the biggest factors fueling this silver frenzy, rising U.S. Treasury yields. At first glance, this might not sound like a big deal, but here's why it matters. Yields on U.S. Treasury bonds, especially the 10-year yield, are climbing toward 5% at a level that signals trouble for the financial system. Why? Because rising yields push up borrowing costs, threatening to pop the credit bubble that has fueled the stock market and even cryptocurrencies for years. We're already seeing cracks in equities, and some experts predict this could lead to an outright collapse. But where does silver fit into all of this? When traditional assets like stocks, bonds, and crypto falter, investors historically turn to safe havens like gold and silver. The problem is that silver isn't just a hedge anymore. It's also a key industrial metal, which makes it uniquely positioned to outperform gold in this environment. Even more intriguing, central banks are losing control of interest rates. Governments are drowning in debt, and every hike in yields makes that debt harder to manage. As liquidity tightens, investors are already looking for alternatives to protect their wealth, and silver is catching their attention. Here's something to think about. Could these rising yields mark the beginning of the end for traditional investments? And if so, is silver the safety net you've been waiting for? Stick around, because the demand for physical silver and who's behind it paints an even more fascinating picture of what's coming next.
Those pesky people in the markets go and subscribe for physical ETFs. And we need this like a hole in the head because there isn't any silver. So, and they will be playing games. I mean, this is one reason, I'm not actually all that keen on ETFs because you don't have ownership of it. I mean, it's far better that, if you want silver, have the coins, have the bars in your own possession. If you have it in an ETF, I think someone's going to dip their hands in it one way or the other. And you find that you rather wish you'd actually gone for the real stuff. But the point is that there are huge shortages developing in silver. So the idea, I mean, also another way to look at your comment, the number of times, in my nefarious career where I have bought into, say, a mining stock or something like that, and I got impatient with the bloody thing. I've been sitting on it for 2 years and it hasn't moved. And all the good news comes out. We discovered this. We got another, we got a sort of grades of 15 grams per ton, or all this sort of stuff comes out. Oh no, price doesn't move. So eventually I sell it. Then what happens? It goes to the moon. So I think, I don't give investment advice, but I think this is one where patience is still required. And I don't think it'll be another 40 years, rather like the bunker hunts I've unfortunately found. Because it hit 50 then. They drove it up to 50 back in, I can't remember whether it was 79 or 80. I mean, I remember that well. Because I had a client who was a very wealthy Austrian industrialist. And this guy, he liked to sell options. In other words, this is really against mining stocks and mining finance houses and all the rest of it. And fortunately, I had no positions at all when the bunker Hunts decided to hit the silver market. And friends of mine in the commodity market who were dealing with him found he was short, and they went bust. I mean, the brokers went bust on it, which was very, very unfortunate, because this chap found that silver moved more in one day than it had in the whole of the previous year. So be patient.
Let's dig deeper into where the silver is actually going, because this is where the story takes a dramatic turn. Asia, particularly China and India, is draining the West's silver supplies at an unprecedented rate. Massive deliveries are being taken on the COMEX exchange just recently. Over 1,300 tons of silver were stood for delivery. To put that into perspective, that's more silver than some countries hold in their entire reserves. So why is this happening? In Asia, silver isn't just seen as an industrial metal, it's also a store of wealth. Chinese investors, for example, are hoarding physical silver to protect against currency devaluation and economic uncertainty. This demand isn't just speculative, it's practical. China is also ramping up its industrial usage. With its push toward renewable energy and its role as a global manufacturing powerhouse, China needs silver for everything from solar panels to electronics. The same goes for India, which recently launched a major initiative to expand its solar energy capabilities. And where does the silver for all of this come from? The West. But here's the problem. Western silver supplies are running low. Stockpiles in the US and Europe are being depleted at a rapid pace, and new mining output isn't enough to fill the gap. Even institutional investors in the West, who traditionally hold silver on paper through ETF, are now facing a dilemma. Should they convert their paper holdings into physical silver while they still can? This east-to-west supply drain is creating a tug of war in the market. What happens when industrial users and investors both realize there's simply not enough silver to go around? These are the kinds of dynamics that don't just drive prices up, they can cause explosive moves in the market. But as demand continues to rise, the real question is, will Western markets wake up to this shortage before it's too late? Stick with me, because silver's industrial story is only half the picture.
We will subsidize the production of photovoltaic cells. Okay, so what happens is that the big Indian conglomerates then set up manufacturing facilities, like I think Reliance Industries, which is one of the big ones, sort of looking to produce something like, 20 gigawatts of photovoltaic cell, output. Yeah, sort of however many units that is. I mean, just huge. Again, carpeting in India with these things. But where do they get the silver? They haven't got any help. Oh, good idea. I tell you what, we can go and raid the markets, the Western markets. So, as I say, 1,324 tons have disappeared on standing for delivery. Now, I don't think it's actually necessarily gone out of the vaults yet, but I would suspect that this is all part and parcel of the shortage of silver around. And again, let's put it this way: if you're a manufacturer of photovoltaic cells or whatever, and you have been prescient enough to accumulate a stock of silver, which you must have, okay. Assuming you've been prescient enough to do that, then when you see the price rise, are you going to try and sell some to push the price down a little bit? Are you hellers like you're going to hang on to your silver, so tight it's not going to go anywhere near the markets? Now, these balances are basically what the Silver Institute tell us are the swing factor, which has stopped silver prices going to the moon by these people supplying the market to make up for the shortfall. There comes a point, Jesse, where this no longer happens. There comes a point where suddenly you find that, say, the supplies are not made available. And not only are the supplies not made available, but you find that
silver isn't just a safe haven asset. It's also the backbone of some of the fastest growing industries in the world. Take renewable energy, for example. Solar power alone accounts for over 10% of global silver consumption, and that number is climbing. Why? Because silver is an irreplaceable component in photovoltaic PV cells, which are used in solar panels to convert sunlight into electricity. Governments and corporations worldwide are racing to meet ambitious climate goals, which means more solar installations and, in turn, more demand for silver. In 2024, industrial demand for silver hit a record high of over 700 million ounces, and that momentum isn't slowing down. But it doesn't stop at solar. Silver is a critical material in the electronics industry, where its unparalleled conductivity makes it essential for everything from semiconductors to 5G networks. With the rapid rollout of 5G infrastructure, demand for silver in this sector is skyrocketing. And let's not forget electric vehicles. EV requires significantly more silver than traditional internal combustion engine cars. From batteries to charging stations to control systems, silver is embedded in the technology driving the green transition. Now, here's the kicker. The supply of silver isn't keeping pace with this industrial demand. In fact, we're entering the fourth consecutive year of a supply deficit. Mines simply can't extract enough silver to meet the growing needs of these industries, let alone the rising demand from investors. So, what does this mean for prices? Historically, whenever industrial demand outpaces supply like this, prices don't just rise, they surge. But here's a question for you. If industries start hoarding silver to ensure their operations, how will that impact the already limited supply available to investors? Stay with me because next, we're diving into why silver is still historically undervalued and what that means for its future potential.
Silver has always been undervalued. I mean, talk to the bunker hunts. Back, it was in the late 70s, early 80s. They tried to corner the market. They obviously came up with exactly the same conclusion. It's an interesting one because silver has gone through quite a number of changes. There was a time when its major market was celluloid film, photography, whatever. But since then, things have changed hugely, and there is no doubt that demand for silver is enormous. Now, I think the question is not so much, implying, should we be bored of this story, but actually look at what the Silver Institute's numbers show, that it has been in supply deficit for the last 4 years. And the drawdown on it has been from what they call investment funds. Now, investment funds, all very well, but a lot of them aren't really investment funds. It's a sort of balance figure, which is an assessment, if you like, by the Silver Institute, to make the numbers, on the sort of supply side and the demand side and the deficit. Okay, we've got a deficit. So what we've got to do is we've got to pencil in a number somewhere which will cover it. So you can see that to some extent the number is made up. But I mean, after 4 years, and not only that, but I mean, in this country, we've got lunatics in government who are trying to carpet the country with solar cells. This demand is not going to go away. And one of the other things, actually, going back to COMEX deliveries on the silver side, is that the Indian government decided, it needed to do something nice and, ESG friendly, whatever. Stop criticism from G20 fellow members.
Let's take a closer look at one of the most overlooked indicators in the silver market, the gold-silver ratio. Currently sitting at over 90:1, this ratio is a glaring signal that silver is historically undervalued. But what does this really mean? The gold-silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged between 40:1 and 60:1. When it climbs far above that range as it is now, it usually means one thing. Silver is underpriced compared to gold. This isn't just a theoretical concept. Time and again, when the gold-silver ratio hits extreme levels like this, silver tends to snap back quickly, and often dramatically. For example, during the Great Recession, the ratio surged above 80:1 before plunging to 30:1 in 2011, fueled by a massive silver rally that saw prices skyrocket. Why is this happening now? One key reason is that gold has been the go-to safe haven for many investors as global instability rises. Meanwhile, silver's dual role as both an industrial and monetary asset has kept it somewhat overlooked in the broader market, but that's starting to change. Experts are now predicting that silver could outperform gold in the coming years, narrowing the ratio as prices climb. Some analysts believe the ratio could fall into the 70s or even lower, thanks to a combination of rising industrial demand and dwindling supplies. Here's where it gets interesting. As the ratio corrects, the price of silver often moves faster than gold, offering outsized gains for those who hold it. If history is any guide, this correction could be the catalyst for a silver rally unlike anything we've seen in over a decade. So, the question is, are you ready to act before the ratio reverts and silver closes the gap? Next, we'll dive into the risks and rewards of investing in silver today and why now might be the perfect time to take a closer look.
Interest rates are completely under the control of the central banks. They're not. Interest rates are rising, and they're rising for two reasons. Firstly, governments are in debt traps, so that the level at which you fund government debt inevitably means higher yields. And the second thing is that with most economies stalling, in 2025, banks see increasing risk lending into the private sectors. Now, an individual bank can reduce its credit exposure, reduce its balance sheet, but it can only do that if another bank or other banks increase theirs. Unless, of course, you get non-performing loans, in which case debt gets written off and deposits on the other side also get written off. And the other thing, I suppose, is if banks themselves go bust, then their whole balance sheet is taken out of the credit system, disappears. The central banks will do whatever they can to ensure that the latter doesn't happen. And they will also try and ensure that bad debts in the economy don't happen enough to disrupt things, if you like, simply by trying to suppress interest rates. But it doesn't work. It's not going to work. Now, this is very important because the level of bond yields, if they're going to rise, they will undermine the credit bubble as a whole, and particularly equities. Equities will crash. And I think this is a very important point. So really, to answer your question, I think central to all this, central to the value of markets in 2025, is this interest rate outlook. And I have to say that people have got this entirely wrong. Now, having said that, you can see that if you look at the US Treasury 10-year, which we take, if you like, as the sort of marker for global bond markets, that's meant to be the risk-free. Risk-free, I mean, honestly, these guys have got no idea. But anyway, that's meant to be the risk-free bond. I can see...
Let's address the elephant in the room. Is silver really the right investment, or are the risks too great? It's a fair question, especially when you consider some of the challenges facing the silver market today. One of the biggest concerns is liquidity. Unlike gold, which has widespread appeal among institutional investors, silver often gets overshadowed, leading to lower trading volumes. Add to that the fact that many investors have shifted their focus to assets like cryptocurrencies and equities in search of higher returns. This has created short-term volatility in silver prices. There's also the risk of industrial slowdowns. Silver's strong performance relies heavily on industries like renewable energy and electronics continuing to expand. If economic growth slows or policies shift, such as potential cuts to solar funding, demand could take a hit. But here's why these risks are being outweighed by the opportunities. First, the ongoing supply deficit means there's simply not enough silver to meet demand, regardless of market fluctuations. This scarcity alone has the potential to push prices higher. Second, the macroeconomic environment is creating a perfect setup for silver. Rising interest rates and growing economic uncertainty are driving investors back towards safe haven assets. And while gold usually gets the spotlight, silver's lower cost and dual industrial role make it an even more attractive option for those looking to hedge against financial instability. Finally, silver has history on its side. In previous financial crises, silver has outperformed many other assets, often delivering massive gains as investors rush to safe havens. Combine that with its growing industrial importance, and you have a metal poised to benefit from both economic turmoil and expansion. So, is silver right for you? It depends on whether you're willing to embrace short-term volatility for long-term potential. But here's a question to consider. As the financial storm intensifies, can you afford not to have silver in your portfolio? Next, we'll pull everything together and discuss why silver could not only survive but thrive in the coming financial storm.
The thing that surprises me is that the 10-year loony bond, if that's what you call it, only yields about 3.2%. I mean, it's crazy. It's completely mispriced. It really is. In Canada's favour as a G7 nation, I think it's got a government debt to GDP of around about 70%, which is high. I mean, don't get me wrong on that. But when the other G7 countries, with the exception of Germany, are all looking at 100% and plus, and with America 130%, it's relatively, relatively something rather. Normally, when a finance minister resigns, currency gets undermined. I mean, it's quite simple. The last thing a finance minister should do is resign, for the very simple reason that it would just undermine the currency. It would drive up interest rates. It would just signal to any foreign holder of the Canadian dollar that this is a bad situation getting worse. So I think it's terribly sad actually that the current government has made such a mess of everything, and I guess next elections there will be a huge great change of government. We'll just wait to see whether they're any better. Jordan Peterson seems to think that the Conservatives have got their act together. So, but time will tell.
Here's the bottom line. Silver isn't just another investment. It's a lifeline in an economy on the brink of massive change. The factors we discussed, rising treasury yields, soaring industrial demand, and a supply drain driven by Asian markets, are converging to create the perfect setup for a silver rally that could push prices beyond $50 per ounce. The supply deficit is undeniable. For 4 consecutive years, demand has outpaced supply, and with industries like solar power, 5G, and electric vehicles showing no signs of slowing, this gap is only going to widen. Add to that the unprecedented physical silver purchases from China and India, and it's clear that Western supplies are running out fast. Now combine this with the financial chaos brewing from rising interest rates. Higher yields are threatening to burst the credit bubble, destabilize equities, and send shockwaves through cryptocurrencies. Investors are waking up to the reality that traditional assets may not provide the stability they once promised. This is where silver shines, as both a hedge against financial turmoil and a vital component of the technologies powering our future. Let's not forget the gold-silver ratio, which is screaming that silver is undervalued. Historically, these kinds of extreme imbalances have been followed by explosive corrections. The last time we saw a similar setup, silver prices tripled in just a few years. Could history repeat itself? The question you need to ask yourself is simple. Are you prepared? Ignoring these signals could mean missing out on one of the most significant investment opportunities of our time. But remember, this isn't financial advice. As always, do your own research and consult with a financial professional before making any investment decisions. And if you're as fascinated by silver's potential as we are, don't forget to subscribe to our channel for more in-depth analysis. The financial storm is coming. Are you ready to take shelter in silver?
Rope, it really is. Money for gold, if you like. Gold, anyway. So, that, I think, would actually undermine the entire Western fiat currency system if Russia did that, which is why I would say it's the, if you like, the financial equivalent of a nuclear attack on us. It would be extremely serious. This is, I'm pretty sure, understood, actually, throughout Asia, because China and India stopped the move towards a BRICS currency with some sort of gold backing, whatever. Didn't want it. And I'm sure that the reason for this is that they didn't want to undermine the global financial system. It's not the Chinese approach. The Chinese let us make all the mistakes. So they just sit there and get the benefit. They don't actually go out and attack us. So Russia's move with BRICS, which was launched bizarrely through the Russian embassy in Nairobi, ahead of the Johannesburg meeting, I think in July that year, it was stillborn. It never made the agenda because the other BRICS members weren't going to put it on. So Russia on her own I think will do it. I think they will go on to a gold standard. And assuming that they don't do it as a deliberate act of financial war, I think that they will do it along with China to protect their own currencies from a collapse in our currencies, which brings us back to the consequences of higher interest rates and how it destabilizes our, our financial markets and pops the biggest bubble we've ever seen in